Welcome to Talk Tickers. Today we're diving into Gilead Science's first quarter 2025 earnings.
Yeah, looking at whether they're really navigating this shifting landscape, moving beyond just HIV.
Exactly. So let's get straight into the numbers. What's the quick snapshot?
Well, at first glance, overall product sales were down just slightly, 1% year over year.
Okay, 1%. But that includes the COVID treatment, Veklury, right?
That's the key point. If you actually exclude Veklury, the underlying base business, it grew 4% year over year.
Right. So there's some definite strength underneath that headline number.
For sure. And a lot of that strength seems to be coming from their core HIV franchise.
Let's talk about that. HIV sales were up. What was it?
6%. A solid 6% increase.
Driven mostly by Biktarvy still.
Yeah, Biktarvy is still the real workhorse there. Sales climbed 7%.
And market share, is it still gaining?
It is. It hit 51% market share in the U.S., still the preferred regimen for many.
Wow. And what about Descovy? I saw some big numbers there too.
Oh yeah, Descovy sales surged, up 38% year over year.
38%, that's huge. What's driving that kind of growth?
A lot of it is the PEP market, HIV prevention.
Right, PP.
That market itself grew 16% in the U.S., and Descovy's grabbed, over 40% of it. So, better awareness, better access.
Seems like their commercial efforts are really paying off there.
Definitely. It's a big contributor.
Okay, so HIV looks strong. What about outside virology? They're pushing into liver disease, right? Livatdelzey?
And Livatdelzey.
Right.
For PBC, primary biliary cholangitis.
How's that launch going?
Pretty well, it seems. Generated $40 million in revenue. That's only its second full quarter since launch.
40 million, okay. And didn't it just get approval in Europe?
It did. Conditional marketing authorization, so they're starting to expand into the major European markets now.
So that's a positive sign for diversification.
It is. But then you look over at oncology, and the picture gets a bit murkier.
Murkier how?
Well, cell therapy sales were actually down 3% year over year.
Oh, okay. Any particular reason?
Some competitive pressures, it sounds like, especially for Tecartus outside the U.S. Yescarta was up slightly, maybe 2%, but overall this segment dipped.
And Trodelvy, that's their big hope in solid tumor.
Trodelvy sales were also down a bit, 5% lower year over year.
Even 5%, despite positive data coming out.
Yeah, they cited some inventory dynamics and lower average pricing, even though demand was apparently higher. It's
complicated. So oncology is facing some headwinds right now.
Seems that way for Q1 sales figures, but there was some really significant positive news on the clinical side for Trodelvy.
Ah, right. The Ascento-4 study.
Exactly. That showed a statistically significant improvement in progression-free survival.
For which patients?
It was Trodelvy combined with pembrolizumab for first-line treatment of metastatic triple-negative breast cancer, the PD-L1 positive group.
That's a tough cancer to treat, so that's potentially a big deal.
A very big deal. They'll present the full data soon and then file for regulatory approval. Could really expand its use. And
there's another Trodelvy study reading out soon, too.
Yeah, Ascent-03. That's for Trodelvy alone in first-line TNBC for patients who aren't eligible for PD-1 inhibitors. We should hear about that later this quarter, Q2.
Okay, so lots happening in oncology, both challenges and potential breakthroughs.
That sums it up pretty well.
All right, so despite these mixed results, particularly in oncology, Gilead maintained its full-year guidance for 2025.
They did. Full-year non-GAAP guidance is unchanged.
What does that tell you? Confidence in the rest of the portfolio?
I think so. Confidence in HIV, likely expecting Livatdelzey to contribute more, and maybe banking on some of those oncology developments down the line. Plus, they highlighted expense discipline.
Right, the operating margin was quite strong.
Very strong, 43%. That certainly helps absorb some bumps.
And the non-GAAP EPS?
Came in at $1.81 per diluted share.
Okay. And anything else on the financial health front? Tax rate? Debt?
Tax rates holding steady around 20%, which they mentioned is partly due to where their IP is registered, a lot in the U.S. And S&P actually just upgraded their long-term debt.
Oh, really? To what?
To A with a stable outlook. They cited the strength of the HIV franchise, the growth, the cash flow. So financially, they look pretty solid.
Good context. So looking ahead then, beyond the current quarter's numbers, what are the big catalysts or things to watch?
Well, number one is probably lenacapavir for PEP.
The twice-yearly injectable we mentioned.
Exactly. The FDA decision date, the PDUFA date, is set for June 19th, 2025.
So very soon. That could be a game changer for HIV prevention.
Potentially, yes. They sounded quite ready for launch, anticipating pretty rapid access buildup, like 75% within 6 months, maybe 90% within a year.
That sounds ambitious. Any potential hurdles?
Well, there's always payer negotiations, physician uptake, patient willingness for injections versus pills, but the convenience factor is huge.
And they see this as just one of potentially many new HIV products.
Yeah, they talk about maybe up to 9 potential HIV launches by the end of 2033, including, interestingly, plans for a phase 3 study of a once-yearly lenacapavir injection for pre-PP starting later this year.
Once a year. Wow. Okay. Anything else on the pipeline front?
They mentioned some promising early data for next-gen cell therapies at recent conferences, like Kite 363, and a bispecific CAR-T for glioblastoma. So the R&D engine is definitely still running.
It seems like it, but there is that Medicare Part D issue impacting HIV sales this year.
Yes, the Part D redesign. They expect it to keep reported HIV sales roughly flat for the full year 2025, despite the strong demand we talked about.
Flat this year, but they expect growth to return when?
They're anticipating a return to growth in 2026 once the effects are sort of absorbed.
Okay, so putting it all together for someone trying to understand the investment picture here.
It looks like a company and even managing a transition. The core HIV business is still incredibly strong, generating cash.
But Veklury sales are fading, as expected.
Right, and they're trying to build up these other pillars, oncology, liver disease. There are promising signs, like Livatdelzey and the Trodelvy data.
But also challenges like the current oncology sales figures and competition in cell therapy.
Exactly. So, near term, all eyes are on that lenacapavir PDP decision in June. That's huge. And the upcoming Trodelvy readouts.
And investors should probably keep monitoring how that Part D impact plays out on the HIV numbers throughout the year.
Definitely. And watch the competitive landscape, especially in cell therapy. But the maintained guidance and the strong financials provide some stability.
Seems like they're leveraging that HIV strength to fund the future growth areas.
That appears to be the strategy. Diversification funded by the core.
All right, let's shift gears then. Time for our segment where we toss around a, let's say, wild yet plausible trade idea. Remember, everyone, this is purely hypothetical, not investment advice.
Okay, hit me with it. What's the idea?
Let's call it the long-acting leapfrog.
Long-acting leapfrog. Okay, I'm listening.
The thesis hinges on lenacapavir for pre-PP getting approved and launching successfully. That twice-yearly shot offers massive convenience over daily pills.
Right, the convenience factor is key.
So the idea is go long Gilead, obviously, but pair it with a short position. Shorting companies that are heavily reliant on the current daily oral PP market. Maybe especially those facing patent cliffs soon or who don't have strong, long-acting options in their own pipelines.
I see. So you're betting that lenacapavir's convenience will cause a major shift, potentially cannibalizing the market share of the daily pills.
Exactly. Eroding revenue for those reliant on the old standard, while Gilead benefits disproportionately as potentially the first mover with this super convenient option.
It's a bet on a significant market disruption driven by patient preference for convenience.
Pretty much a leapfrog over the existing standard.
What are the risks, though? Because that sounds whales bold.
Oh, definitely bold and high risk, lots of risks. Lenacapavir could face regulatory delays, right? Or the FDA might approve it, but with restrictions.
True. Or adoption could be slower than Gilead hopes. Payers might push back.
Yep. And maybe competitors aren't standing still. Maybe another long-acting pre-P emerges faster than expected.
And the performance of the short side depends on more than just pre-P dynamics for those companies.
Absolutely. So it's a complex trade, highly dependent on specific outcomes, timing, and market adoption. Definitely not for the faint of heart.
A classic wild yet plausible scenario then. Lots of ifs.
That's the idea. Something to think about, purely hypothetically.
Okay, so wrapping up our deep dive on Gilead's Q1 2025 call. A resilient core business, some exciting pipeline potential, but also navigating market changes and challenges.
What stood out most to you from this quarter? How do you see things playing out with lenacapavir and Trodelvy? We'd love to hear your thoughts.
Yeah, let us know what milestones you'll be watching.
This has been Talk Tickers, aiming to give you the insights you need. As always, remember to do your own homework and thorough due diligence before making any investment decisions.
We'll catch you on the next deep dive.